Everyone, thanks for joining us today. So if you're here, I hope you're in the right room. This is for the panel from Weekend Project to Venture Back Startup. I'm Brendan, and I'll be your moderator for today. And we're joined by Najla from Antler, Ashwin from Leaf, and Audra from First Move. I'm going to let them
Hi everyone. Maybe I should stand for someone here. I'm the scouting director from Antler here in Malaysia. So I've been here since Antler basically got incepted in Malaysia. So what I typically do in Antler is I'm the person who stalks founders and essentially see whether there's a good fit to work together as part of our residency program, but also get involved as part of portfolio management from Malaysia, but also involved in operationally on a regional level. Prior to this, I've got 15 plus years across many different industries, so I'm not someone who actually sticks to one specialization. I would say I'm more of a generalist, but I've cut across many different industries like financial services, oil and gas, education, corporate banking, and I've also walked down the path of being a founder before, back in 2017, where I was actually attempting my own fintech startup out of Singapore. But I was one of those who had a really clear lessons learned from a failure, right? So wearing that proudly on my shoulders. But yeah, really nice to be here and share a little bit more of my perspective as a VC. Thanks.
I guess, are we all? Yeah. Hey everyone.
I'll stand for the
Yeah,
question.
I'll just stand for the beginning so you can see me. But yeah, hi, I'm Ashwin. I'm one of the co-founders of Klee. So it's an AI startup that helps with content creation, so a content workspace. And also an Antler alumni. So yeah. So we did Antler almost 2 years ago now, actually. And then over the journey, it's been kind of before this, I was running a marketing agency, so bootstrap business from university actually. So we were just kind of me and Lizzie actually, we were two students, just kind of trying to build a small business from our dorms. That became a larger marketing agency. We did mid-six figures, something like that. And then at one point we wanted to kind of get into tech. We were always kind of interested in tech, but we never really knew how. So I guess that's where we wanted to take that bootstrap business and learn how to build kind of a tech business that's scalable and can go way bigger. And that's where we kind of landed in Antler and then eventually started. Yeah. Thank you. Yeah.
Hey everyone, Audra from First Move. We are the first institutional checks for founders. A lot of times we've had founders pre-revenue, sometimes pre-product, and yeah, kind of helping with the first moves of the early journeys. So probably some of you came from the 500 office from previous session. Probably you met my partner in the fund, Joel. So both of us, we started this fund 2 years ago, and we are backing founders across Southeast Asia, building in their first moves across industries. We're kind of quite bullish on AI application layer companies. We have quite a number of consumer companies as well. And before that, so I've been in Malaysia for 17 years, soon to be. Don't ask my age. Yeah, for a pretty long time. And all this while I was working with startups and in fact working with Joel and Heidi for their first startup, digital media. Later there was e-commerce, and last was fintech. So quite hands-on operator when it comes to startups. But everything was Web 2.0, right? So now I'm excited to get my hands dirty on AI as well.
Thanks. So thanks everyone. A quick rundown of how this session is going to go. I'm just going to raise a few discussion points and I'll point out maybe one or two people to get us started. But if at any point you want to chime in, just feel free, just jump in. It's a very, I know it's not closed, right? But it's a closed door session. So we've got a panel here where Ashwin is founder, Audra and Najla, both of you were previously early stage entrepreneurs, and then moving into that VC side of the table. I think let's start off with that transition. What do you think is the biggest difference between being on the founder side of the table versus being on the VC, the funding side of the table? What do you look at differently, and what do you think about differently when it comes to looking at projects you should invest in?
maybe I can start since I'm holding the mic. So my transition happened just 2 years ago, right? And actually investments and VC for us, it was more like, let's do it as a side gig, small fun, just do this, kind of, help founders. It was never say, oh, this is where I'm gonna make a lot of money. It's like, VC equals money. Not really. Actually, in the last 10 years, most of Southeast Asian VCs did not make money. So that's why right now it's so hard to fundraise for startups as well. So I think the transition is really, comes out with empathy, of understanding what it means to be building from like really, really early days. Because, we've been there, we've done that, and we know what it means, like when you're so passionate about an idea, but you knock on the VC doors and they're like, no. So you kind of, the rejection and all that. The shift also has to happen because now you're in a position where you need to make sure that the capital you invest is actually going to be returned. So the moment capital is returned, the more investors is going to put back in the market. So it's how the money flows. So you kind of need to kind of understand the psyche of investment math and what's going on. And that means you kind of need to make those decisions. Who do you invest? Because, we meet great people every single day. But then the acceptance rate of the investments we make, so particularly for First Move, is actually less than 2%. Of all the startups we meet, we invest in less than 2%. It's tough, right? But what helps us to make those decisions when there's still no revenue and no traction is understanding founders and really sitting down with founders and seeing, can we work together? Because the way we look at it, because we're such early investor, we, in a way, like you're non-executive co-founder, right? And we don't do the work, but we really want to jam with you guys and see how things can evolve and like understanding. So I think that maybe is the transition from the founder mode, but still being in a founder shoes, understanding that, but then being more helpful with capital, not only just ideas. So I think that's I would say our transition from operating into investing.
I think Audra has said like a lot of things that feels relatable to me as well. And maybe just to share my own perspective or like my own journey, right? I was very intentional in terms of going to work with Antler as opposed to just saying, hey, I want to actually transition to become a VC. Because I would say like the model that Antler has is, yes, ultimately you are a VC, you're raising funds from LPs and you're actually like, deploying that and hopefully, making all these returns. But at the same time, it's also the fact that we are also early stage backers, right? Like we work with founders on like what we call day 0 or day 0.5, where it's again, pre-product, pre-revenue, and effectively you end up becoming very involved in the early days of them, even like building out their ideas, building something that's actually more scalable, more impactful. So, that was essentially for me a very, very, how do you say, sweeter transition from like someone who's been on the operator side as well. I tried like, my own hand at being a founder, where because I am still working with the founders themselves, right? But ultimately, like what like Audra, you were saying, you're managing other people's money, right? So you have to also be ethically responsible for how that money is being deployed and how you actually look at assessing, founder capabilities. But to early stage investors, there's not, again, too much for you to want to sort of identify as clear like metrics of success with the founders. So what you end up having is to sort of take the risk of backing the right founders. So it's a very, very different type of, I think, assessment that early stage VCs would have to do compared to maybe later stage VCs, right? So there is a lot of that journey of having to understand the founders, to sort of like get signals of like where you can see execution capability of these founders really bringing their business or their startups into like a larger vision that would give you the right capital returns, right? Like as a VC. So I think like that's where it's probably like an easier transition for us. I'm not sure, Audra, whether you think it that way, to becoming an early stage investor. I think maybe the jump is way bigger if like we are from like an operating background and suddenly having to jump to become later stage VCs. I think that's going to be a much different world, much different way of thinking. Yeah.
So if I'm getting it right, what you're looking at is actually like less about the idea and more about the founders themselves. Is that the case?
I mean, definitely the idea is important, but I think the idea is very much also driven by how the founders are thinking about this big vision. Like they can see the path of how they're going to sort of transition from where they are right now to that like $1 billion vision.
Okay, so that's an interesting point, right? Because now we are looking, you talk about the signals about the execution capability, looking for what they are demonstrating. I think when it comes to VCs, to pass it, looking at what signals you can get from the founders and the team they're working on. But from the founders' perspective as well, like founders, we always want to founders to always see like, what is the correct thing to be working on for the next 10, 20 years of our life. And we're also looking at signals for like what's the minimum viable signal that we can hit before evolving. So maybe actually you can start us off first with this from the founder's perspective, what do you think from all the experiments you done, what kind of signals do you look for before you say, hey, this is irrelevant?
Yeah, so I think, people talk about how you have to kind of persuade VCs to kind of like get money and like sell your idea and sell your business. But like, I think one thing that was also interesting to learn while I was at Antler is like, this is as much about getting the money from the VC as it is also for you figuring out what you want to work on. Because like ultimately, okay, it depends on your goals. If you want to build a lifestyle business, which is basically bootstrapped, cash coming in every month, you have a comfortable lifestyle and stuff, that's cool. You don't need to kind of go this path. But if you want to build something that's much bigger, well, you have ambitions to build something that's used by millions of people and becomes like the dominant business in the category, then there's only so many ideas that exist that can exist at that scale. And I think as founders, I think one of the things that we need to figure out is like, okay, yes, this idea exists. Am I the right person to take this on? Can I try working on it for 2 weeks, 4 weeks? Can I get early signals of traction? Can I check in with how I'm feeling about working on this problem? Am I feeling excited to tackle this problem on a day-to-day basis 3 weeks in, for example? Because that'll be also an indicator of whether you're excited to tackle that problem 10 years down the road, right? And these journeys are long. So ultimately, as much as, you're trying to get investment from VC to invest into your business, you're also trying to figure out what you want to invest your time into, which is actually more important and more valuable than the VC money in reality, right? Because you only have a limited lifespan to do things in this world. And I think a big part of it is actually just like testing different things, trying out different ideas. We in our own company, when we were deciding what to work on, we had a list of 30, which we just put down in a Notion spreadsheet, and then we were kind of like evaluating all these different ideas, seeing which ones are we personally excited about as co-founders independently, and then we were looking at like, okay, let's say these 5 ideas were shortlisted. Of these 5, which of them have a big enough market potential? It could be a big enough business. Like we're not building a shoelace company to sell shoelaces to Sarawak, right? We're building.
Very specific. I'm guessing that's one of the ideas on Notion.
I don't know. I feel like we should have gone with that one, but yeah, growing market, but yeah. So you want to evaluate different things for yourself actually first before you're even kind of like choosing ideas to pitch to VCs. It's more about choosing ideas to pitch to yourself and what you want to personally invest your time into. Yeah, I think that's the biggest lesson I've learned on that space. Yeah.
Audra, maybe you'd like to add up to so that's from the founder's perspective. Like what are the signals that you would be looking for to decide that this is not that way?
Yeah, so exactly. So maybe that's quite aligned how Antler is looking at founders, because what you're saying is all about signals, right? For you as a builder, you want to find signals that what you're building makes sense. Same goes to investors, right? We always look for signals. And a lot of times might not be yet full-on product, full-on traction, right? Generating a lot of revenue. But like if you're building something over the weekend, I think the panel, discussion is about the building weekend project, right? So what kind of signals can you look for your weekend project? And we as a VCs probably would be looking at what's your learning loop? Are you talking to customers, actual customers? Because building is fun, but actually building something that users would use is even more fun, because then you get real feedback and iterate. So, if someone comes to us and say, over the weekend I built this prototype end to end, maybe not yet integrated with APIs, security, nothing yet, but it can work. And I've spoken to 5 customers, clients, they're using it. And if they actually come back next week and use it again, that's already good signal. Yeah, that means you're building something that the customers need. And then if you're listening to the customer feedback and iterating, the iteration loops are also quite fast. Say, oh, next week I'm already building something else or iterating or scrapping this because customers did not use it. That's the signal we want to know. Because if you engaging actual human beings or companies who are using your product and want to use a product, most likely they will be willing to pay for that. And you can very quickly validate are they willing to pay for that. Then it's a very strong signal saying that maybe you should sit down and build it, not only during the weekend. And then obviously next question would be like, would you commit to this full time? Because, well, to be fair, we actually invested in one founder who was not full time with his business yet, but he set up a team and committed to the idea to build it out. And only the next round investors came in and saying, okay, if we are writing a check, you need to come in full time. So it took a founder to go back into business probably in 7 months or so to build full time. So all situations are possible.
No, I mean, I don't think I have anything additional to add to what Audra said. It was very spot on, right? I think at the end of the day, it's really about if you have a weekend project, and rightly so, right? If you're already speaking to customers, I think you've already went beyond the first hurdle. I think sometimes people, and I've got friends who are also weekend builders as such, right? Where they're just doing it out of passion and hobby. And in most cases, they're actually just intentionally building for themselves because it actually gives them joy. But then you have to intentionally think, do I want to take this business to be something beyond just me? I want to build it for other people. Then it's really about, okay, are you solving the pains of other people, right? It's not just about your pain. Now it becomes a pain of the masses of the target users that you think is going to experience this pain, right? It's really about identifying who you're building it for, right? That's what I think in previous panels also, I think one of the things I always say is that if you want to build a real business out of something that is just a side project or side hustle, you have to be intentional as to who you're building it for, right? I think that's going to be the biggest number one question that you have to answer. Because what Ashwin said, if you're just thinking, hey, I want to build this as a side hustle or a lifestyle sort of income generator on the side, then it's okay, it's fine, it's not wrong. But as long as you actually want that to be the path that you're taking it with. But if you have a bigger vision, if you want to impact more people, then you have to answer that question first, right?
So I don't know if the mics are still working. Can you guys hear us at the back? So it's being intentional. It's prioritizing that learning, finding things you're passionate about. Sorry, my brain is all over the place.
It's okay.
So I think as builders, one thing, trap that I don't know about everyone else in the room, but trap that I myself fall into very easily is that I go into the product because I go, oh, I want this feature, and sometimes it's getting too pigeonholed into all of these features that need to be built before the product is ready to go to market. I think maybe with Ashwin, maybe you can start. Sorry, I haven't started the question yet, but for this, maybe Ashwin can start us off, and maybe Nashla can also, Nashla can give some examples. What's an example of something non-technical you did that made a huge difference early on in the journey of building up the startup?
Oh, interesting. So I think I'll talk about the first point that you mentioned earlier about how when you have a startup idea, and I've spoken to a bunch of founders as well, they want to build this integrated system which integrates with all the major banks in the world and then builds this financial ecosystem. And then I would ask them, oh, okay, what have you got so far? It's okay, I've got this UX done of how it's going to look, and then it's okay, and then what's blocking you right now? It's oh, I need to onboard 50 banks next month or somehow, 50 commercial banks to get onto the platform and build their APIs for them. And then they were okay, yeah. And then I was okay, that's probably gonna be a bit hard, don't you think? And then the guy was yeah, but I'm just gonna raise VC money, and that'll solve the problem. I should be able to then have the funds to hire a team to build all these APIs and integrate everything and create this product vision, right? So what you want to do in the early stages is can you constrain your idea to just the most important problem or the simplest version of that idea, before you go on and all founders will have this big vision of what we're going to achieve, right? How we're going to have millions of users, we're going to be ecosystem people or whatever, right? But like, you want to constrain your idea to just what is the one particle of this idea? Like, what is the unit value that you can create as a business? And then from that constraint, build a really simple but good product that works for that particular thing, and then send it to one customer and try to get one sale. Like, that's really how it starts. And then after that one customer is really happy, then you get 2 customers and you move on, right? And then you slowly start adding the other features and build like a large thing. I know lots of people want to build the next Google, the next Apple, and you can. It's just that Google and Apple also start with one specific feature or one specific thing. Google didn't have Google Docs and Google Slides and this whole workplace thing. They started with just a search engine, which just surfaces a bunch of links, right? So think of your vision, your grand vision, and ask yourself, what is the feasible one thing that I could start with? And nowadays with vibe coding, you can, and like I've been vibe coding a ton in the last 3 months, for example, you can actually build end-to-end products without knowing how to code and just asking AI, hey, I need to build a backend. Can you build a backend for me? And like, it would just kind of like figure it out, right? It's not perfect, but it is good enough to make one person happy, and that's kind of like your goal. You want to build something useful for that one person, and then also something simple enough that you can make that useful, right? Yeah, so I guess that's the main thing. And then the other question you had was on. It's okay. We can wrap up on that one. Yeah, maybe.
But the question is definitely like, so for you, it would be like, what's the one technique, like what's the non-technical thing you did? I mean, like non-technical.
Yeah.
I think for Audra and Marsha, would be like, from all the portfolios that you've seen, everyone you've talked to, have there been any examples that where they did something that wasn't like technical, but like would make a huge difference to actually get either project funding or project like you as a business?
I think the other thing on the non-technical part is like for the first 2 months or so, we didn't write a single line of code. 2 or 3 months, yeah, we didn't write a single line of code. All of the pre-work that happened would be actually just kind of like making mock-ups, pretending as if the product exists, and then talking to people and like starting to get some initial feedback. Even before we raised from Antler, it was also, we were 2 co-founders, both business co-founders. We didn't have any technical skills. And at the time, AI wasn't good at coding. So yeah, we were just kind of like making fake mock-ups, making fake landing pages. You can do this on Framer, Figma now. Now it's so easy to make landing pages. You can make one in 5 minutes on your phone on Lovable. Before the end of the session, you might even have users, right? So like, yeah. Yeah.
Like whipping out my laptops.
On their phones, literally, Lovable on your phone. You can build a website, send it to a WhatsApp group, get a bunch of users before the session ends. If anyone does that, I'll give you like a free Sleep Pro for a year or something. But yeah, so I think you can do a lot like without having. I think a lot of people are also waiting for a tech co-founder to get started on their ideas. But one thing that made the difference for us when we were trying to bring on a tech co-founder in our team is we already did all these landing pages, we already got a bunch of validation, we're already going to events and promoting our non-existent product. And we were already getting like people to sign up for our waitlist and stuff like that, right? And then when we started talking to our potential tech co-founders, right, we had that stuff to show for. And then they were like, oh, okay, so this is not like another guy who wants to build the next Google. This is someone who actually is serious about like taking action even without anything. Yeah.
Yeah, so maybe for me, like, I can just share a little bit in terms of some of the portfolio companies, what they have actually done, right? Because for quite like a lot of the cohorts, we invested in them at a point where like they didn't necessarily have like a full-blown MVP, right? They maybe would have like just a prototype by the time that they actually went to RIC. So like, for example, there's this one company where they were building, or they have built like a RegTech solution for like the BFSI industry. And quite a lot of regulation or like regulators' websites, they actually have anti-crawlers, anti-scrapers, right? Because there's like a lot of, I think, restriction from like a security standpoint in which that they wanted to bar. But the team actually needed to show like an actual real working prototype with these institutional clients. And effectively, if they don't have the solution in the back end, sort of like want to crawl and scrape, like they can't really show the value of like what they built. So I mean, essentially, it's doing hacky stuff, right? Like where the founders themselves would literally just download like all like the specific documents in which that exist within the regulatory websites, and effectively have that uploaded into like the backend, just so that they can actually showcase that this is how our AI is functioning to give you that specific financial regulatory advice and things like that, right? And we have like a lot of like similar type of like portfolio hacky experiences like this, right? Like because as you're building in the early stages, you're not going to have a perfect product. And to be fair, when you think about it, you will never have a perfect product because your product is meant to constantly evolve, right? Markets change, external factors are going to like change the way that you probably think about your vision and how your company or startup idea is going to evolve as well, right? So I think it's always just having that mindset that what's the fastest way that I can show value to my users? Because your outcome and objective is one, is to create value to them, but it's also to get them to pay, right? So what is the fastest way in which they can get there? And at the end of the day, it's just a matter of prioritization, right? You can't build a full-end product fast enough. I mean, even though with vibe coding, yes, you can accelerate a lot of that journey, but you won't be able to build every single thing. So what's going to give you like maximum value for like 20% of the effort, right? Like again, it's that whole 80-20 rule when you start building, especially at the start, right? So that would be like my biggest sort of emphasis to a lot of like early stage founders. But even when you've already grown to a certain size, like you are constantly going to have to evolve. So, but when you evolve, you always need to figure out what's going to be my next priority, right? Like having that sort of roadmap is going to really help you in terms of like knowing where to put in more effort, where to put in more emphasis, and how you're actually building out the product.
Maybe just to add on and kind of bring back to what you Brandon said. You said like, it's so fun to be building features over the weekend, you know, every weekend, just new feature, churning it out. And maybe that's where we can make distinction, hobbyist builder versus a founder builder, right? So hobbyist is the person probably would be like so excited to be building out new features, test out new tools, and you know, enhance, because it's just fun. It's a process, it's learning. Founders will have to make these tough calls saying, actually, maybe I should kill this because no one is using, and maybe do a new feature that actually will solve a problem. So founders are making those decisions, and the faster founders are able to make those decisions, the faster you can get to a real customer that's actually going to use your product. So I think that's kind of, you know, an important mindset to have. And just before the panel, I was just chatting, you know, with Cleve team, and I was like, so guys, what's new? You know, since last week got up, and you know, like, we just scrapped a bunch of features because, you know, there's just app became so clunky because, you know, you might be talking to a few people here and there and say, oh, it would be nice to have, nice to have. And these nice to have, you start building, and they are nice to have, but probably not everyday use case. And then your app becomes really, really clunky. And when it's clunky, then there's no clarity. What is one job to be done for a customer, right? So I think it's always like when you're just starting from the scratch, think about one problem to be solved. Can be scrappy, can be basic, because there will be always enough time to build later when you've grown enough, when you have enough attraction, and your customers actually say, I need this new feature because that's going to be really helpful for us. So then you build with intention. So maybe that's just kind of drawing back to the hobbyist versus founder.
So,
Yeah.
speaking to the just yell into that.
Because it all,
Some of business. Anyway, so really, I think the trend that we're seeing now is like one of the things that really makes a founder is like intentionality, knowing like what you're doing for, what problem you're solving, and who you're solving it. And that's what separates like the hobby projects from the ones that get funded. So I think following on that question, we have seen some examples of like founder green flags, right? Like being willing to learn fast, knowing like exactly what problem you're solving. Have there ever been founders where you felt like they're green until like a certain point, and that one thing was like a killer that's when you know I can't fund this guy. Have you ever seen cases like these, and have there been? And in that case, what was the killer? If you're able to talk about it.
this one I really want to think about. If something comes to mind, I'll try to like go ahead. I really want to think about this because I want to give like a really juicy one.
We can start with an easy one. Like what did Ashwin do that made him explode?
Oh
yeah.
Okay, so this is the bitching about Ashwin. I think it's actually about ambition. Yeah, maybe this is not going to sound as juicy, but it's really that, you know, again, going back to the topic of intentionality, right? It's okay if founders want to build a business that they're happy with in terms of like maybe being more like mid-sized SME kind of company. It's okay. But for the moment that you've decided that, no, I want to grow this into becoming a unicorn, I want to take VC money, scale, especially like fast scaling, is going to be really important. And what you're building today in terms of like your go-to-market product is not going to be the thing that brings you to become a billion-dollar valuation company, right? So that ambition needs to really be seen, even at the early stages. That even though, yes, this is what my product is doing, like I'm serving to like solve this particular problem, but I have a bigger vision that I want my company to take this direction in, right? Like, so whenever you work with founders and you're like, yeah, they definitely know like what problems that they want to solve, but the way in which they're approaching building this out, building this business. So it's not just about the tech in itself. It's not just about the physical product or like the actual tech product itself, but it's where, like what direction that they are seeing that they want to bring this towards is not there. I would say it really does reduce my conviction in wanting to back this founder, because I think at most what this founder can build is maybe generating $10 million in revenue, and like that's it, that's the cap. It can't, like this founder is not going to be the right founder to bring this to become at least like 100 million ARR kind of company, at the minimum. So I think like that is usually like where the tipping point can happen, when everything seems to be like, hey, great stuff that they're building, they've definitely identified a good problem, but there's just not that ambition that exists in this founder. So that's for me what I've seen in quite a number of founders that we have worked with in our residency, right? Yeah.
I mean,
someone give a juicy story.
I cannot do name dropping here, juicy stories. So Brandon pitched me one. So maybe it's more like, what kind of deal breakers there are. It's like, obviously when, you meet founders, you get excited, feed off the energy, and then, potential. But probably like one thing we typically try to test out during the conversations, jamming together to see if there's a synergy, if there's actual conversation back and forth, ideating together. And that's when we can notice if founder has growth mindset or fixed mindset. Because a lot of times someone is like just in love with what they're building, not necessarily that solution addressing the full-on problem, right? But then it's just like a good feature or a good, space to be building. And if we see that founder is like quite rigid in like, you prompt on saying, hey, what if we do this? What if we do that? What about that space? What about that kind of use case? If founder is a bit fixated and maybe defensive around the product, that's probably a red flag, because it's going to be hard, right? Especially the current speed of the way your big players, your bigger LLMs are churning things out and launching. Your startup can become obsolete overnight. And the question is like, how quickly are you able to find a niche again? How quickly you can go deeper into the vertical that you're building and really address the on the ground problems. So yeah, fixed mindset probably is a quite big red flag.
And I would say that maybe also a proxy, right? If they are very rigid in the way that they're thinking, it means that they're also rigid to taking feedback from customers themselves. So meaning, again, you're not building for other people, you're just building for your own joy, right? Yeah.
So actually that's
Or ego.
Oh, sorry. Because you have it's an interesting point, because Audra used to be Faith, and Faith before it got to where there was a lot of pivoting that happens. Do you want to talk a bit about like in the early days, how do you decide like this is what we're going to focus on, and this is like something we should share about our single step?
Oh, we have another 3 hours. Painful journey, like my trauma.
Where are the drinks?
So texting the team to buy some alcohol.
Just for context, maybe for younger people in the audience, because this business was built in 2015. Yeah. So yeah, there you go. You were not our target audience. So imagine fitness company pivots into fintech. How does that happen? It's quite painful. Because imagine, right, we build a company in fitness. So if KFit was what ClassPass is today, it's a fitness membership platform for different classes. our entire office was built like fitness office. Like we had running track, we had basketball hoop, we had even a pole, we had actual people who practice pole dancing in the office hours. Engineers were happy. No, I wasn't in town. So if imagine building like culture and all that, and suddenly you say, actually, so the opportunity here and how we make that decision, right? Opportunity here is either go really deep vertically into fitness and be the best fitness platform ever, integrate wearables, maybe, do leisure wear outfits, whatsoever, you name it. Or you actually go a bit broader because we have already infrastructure built for, this booking and getting memberships and vouchers. And then we looked at, across our team strength as well, what our team was best at. And we had a team from Agodas, from Lazadas, from all the, e-commerce, Groupon. We were good at multi-category commerce. So that was one of the decisions saying what we are best at and what is the opportunity in the market to capture versus go deep or broad. And it's one or the other choice, you can't do both. So we decided to go broad. Going broad across commerce and also kind of painfully figuring out what are these pain points, because one thing we knew for sure, and maybe I kind of draw back to the kind of one thing maybe to remember, is that a lot of times we need to remind ourselves, we need to fall in love with the problem, not solution. Because our problem was that small studios, fitness studios, did not have enough customers. That was problem statement, right? And the solution was it does happen. But actually, if we extend that statement of problem, then Fave app served it better because it served more customers and more merchants to bring to the customers. So if you drill down at, what is the problem, you can reiterate different features and different platforms for your problem statement. So yeah, honestly, if I look back, in the features we built, there are certain features that not even surface the market. And we killed it before, and one period of time that we had I was kind of working with this a new value proposition, new services team, where we would build a feature, give it 3 months to validate, allocate the budget, allocate the team, doesn't hit certain revenues, we kill it, and we killed multiple. We actually even acquired a company to build certain feature, table booking. We hired a team, built out features, deployed it, and we killed it in 6 months or 9 months because it just was distraction. So yes, it's very painful. It takes a lot of alignment, and also maybe kind of reflect that it was a little bit different time how companies are built. That was Web 2.0, right? We were a very big team. Now, companies can be built with 5 people, 20 people, and you move fast, you move lean. So I think, it's more of like reflection on our journey. Yes, we pivoted a lot. So maybe the lesson from there is stick to the problem statement because solution can take different forms and shapes. And then it's just very important to align the team constantly to know why you're doing that. And we spend a lot of time with product teams convincing why are we doing that. Yes.
So we've been kind of tackling this problem of how do we make content creation a lot easier over the last 2 years, right? We've rewritten our code base 4 times at this point across mobile apps, web apps, and stuff like that. We've made a bunch of investments in features, and you spent a whole month or 2 months building a feature, which we eventually killed a month later. There are also times where we would do 1-week sprints to just try to build and launch a feature and then send it out to a bunch of users, see if they use it at least for 2 days in the next week. If not, then we just scrap it and continue. That's the cool thing about vibe coding, by the way. You can kind of you can just test out features very quickly, integrate whatever Western. For example, we tried a voice agent before. We might bring that back, but we tried integrating a voice agent into our app for 2 weeks, and then we just kind of let a bunch of users use it, get their initial feedback. We realized that the voice models are not there where we need it to be yet, so then we just scrap that feature for now until, for example, maybe the developments in the models improves, and then we might bring that back when the market changes and when the technology changes. So I think that's kind of adding on to the K-Fit story. I guess it's so interesting how even companies at much larger scales with more funding are still going through the same iterative cycles that you guys are probably going through even in your weekend projects. It never really ends. And even if you look at products like Instagram, when TikTok came out, they had to suddenly make a pivot. They had to change their product design and direction and philosophy in order to stay relevant, right? So yeah, it never ends. You go into the multi-billions of dollars, and it's still the same kind of journey of never having the perfect product. Yeah.
So it's really like staying agile. And I think importantly is constantly running experiments, constantly trying to see like, if this doesn't hit my metrics, I kill it. So
Yeah. And also, I think that's a skill of the founder, right? So that's a skill because now that you know that, okay, you're gonna have to do this between now and when you're a multi-trillion-dollar company, you know that that's a skill that you gotta get good at. And I think that's also a more recent reflection for me that like, oh, okay, so getting good at this habit of experimenting and tinkering and building things, seeing if it's useful or not for people, and then deciding to kill things or deciding what to do next. I think that's part of the journey. Yeah.
It's a killer skill.
So I think with that topic of experimenting fast, because with Antler, the cohorts run across 3 months, is that
Yeah, I mean, about 2.5 months. We are also right now on our current cohort experimenting for like a shorter period of time because we're working with pre-existing teams. Because times have changed, again, people can actually like execute faster now.
Yeah.
So that's why we're actually looking at founders who are more intentional about what they're building, right? So you can see the theme throughout what I said. So, for example, pre-existing teams, we basically will not have like a set structure or like set date in which they can start. Because if you're already building, we should meet you where you are as opposed to you meeting where we're at. And so it can actually be even shorter, 6 weeks in which that we run the cohort.
6 weeks? Have there been sort of, I wouldn't say best practices, but good examples that maybe people can learn from in terms of how to carry out experiments at a fast enough rate so you get enough learnings within a span of 6 weeks?
Right. So again, right, like, so a lot of these teams that we are working with right now in our current cohort, they are already building, right? Like, so they already have some form of a product and also already users or customers that they're talking to. So when they actually start coming into our cohort, one of like the main things in which that we do is we basically would have a sense check with them. Like, what is your goal? What do you want to achieve by the end of your time with us, right? Like, be it whether it's 6 weeks, be it whether it's 10 weeks, what is it that you want to hit in terms of like KPIs, right? Like from a user standpoint, from like a revenue standpoint even. And then effectively, but we also kind of sense check that against what their market looks like, right? Like if you're going to obtain or like secure few 100 million ARR by like year 7, right? Like you work backwards. So what does that mean in terms of like the pipeline, what you need to hit? So then we actually like would sit down with them, understand, okay, like, so if you're gonna have to like achieve this type of milestone by the end of your time with us, then what do you need to do week by week, right? So then effectively like, they would have to spell out, right? Like be more, again, like aware and proactive in terms of like what are some of the experiments that we need to do to quickly validate some of these things that they have to achieve those metrics on a week by week basis, right? So that's essentially like one of like I think it's good discipline to have as founders, right? Where you have a plan. Plans can change for sure, but at the very least, you have certain goals that you're trying to achieve. What would be the levers that you have to pull to at least try to get to those goals, right? And I think like that is the kind of rhythm that you have like on a weekly basis, right? Like I think like really aggressive founders on a daily basis, they're actually seeing progress, right? And